Good morning, traders. Today is the 5th of November. My name is Neville Hornsey, market analyst for YouTrading, and today I'll be looking for strategies to trade British pound versus the New Zealand dollar. Okay, the first thing I want to do is look at the YouTrading.com Forex heat map, look across the British pound, see what's going on. So the pound is weaker against the euro, the US dollar, the yen, stronger against the Swiss franc, stronger against the Australian dollar, and then weaker against the Canadian, the New Zealand dollar, and the Chinese yuan. So we're looking for shorts in the British pound versus New Zealand dollar. If we go to the global interest rates, on the 6th of October 2021, so last month, the New Zealand interest rate rose from 0.25% to 0.5%. So the RBNZ are currently in a rate hike cycle. Look at the British interest rate from the Bank of England. Obviously, yesterday they were supposed to raise the rates from 0.1 by 15 basis points. And on the 19th of March 2020, they actually reduced from 0.25 down to 0.1. So that's a rate cut cycle. So currently, New Zealand interest rates are appreciating. British interest rates have been depreciating. Let's start on the daily. If you put a 20-period moving average and a 200-period moving average just for the general trend, you can see that when the red 20 is above the cyan 200, you could be looking for longs. So that's how a lot of people just sort of have a quick visual of which way the trend is going. Other ways you can do it is to sort of find a trend line. So you got a swing low here, then you take a swing low there, and then the third touch is up here, put a trend line through it. Obviously that's supposed to be strong. 3 touches is supposed to be strong. A breakdown for that obviously signals that there's possibly a change in trend. You got a high here, a low here, a lower low here, a lower high. So a break of that low is obviously a continuation to the downside and a downtrend confirmation. So currently price action is following momentum. So the momentum is to the downside. Red is below cyan, 20 is below 200. Price action is below swing lows on the daily time frame. So whilst we're below the 1.932 to 1.933 and below the red moving average, the 20 daily moving average, I'm looking for shorts. All right, if we go to something like an intraday chart on a 30-minute time frame, just to zoom out a little bit. So this vertical line is when the RBNZ raised their rates. So, we were starting to look for possibilities of a short in the pound versus the New Zealand dollar. Took a little while on this chart for the 20-period moving average to get below the 200, but when it did, you can see that price has basically been just tracking lower. So when you're looking for shorts, what I like to do is box out the Asia Pacific session. London wakes up and we get volume come into the market, and then the London traders sort of basically push the market. Obviously, we're looking for shorts. The interest rates and the daily time frame sort of show that we should be looking for shorts. So we don't take anything like this break to the upside. And then once the price is going that high, and we've got maybe a trend change or a bear market rally, we don't do anything whilst the 20 is above the 200-period moving average. So here again, Asia Pacific session, got a short, but the 20 and the 200 aren't confirming. Then yesterday, again, this is the Asia Pacific session, didn't do anything because we had the Bank of England sort of decision. So no one should take a trade until we get that decision. Obviously, this could have broken to the upside. We could have had a complete change in trend, and things could have looked completely different today. But before I show you this, right? So what I want to sort of show is once you have a couple of Asia Pacific session ranges, and you see that the markets are going sideways, what I like to do is box them out. So you can have 2 or 3 or maybe more, but here we've got 2. So that becomes one bigger range. And then when you get a breakout of this larger range, like we had today, in the direction that you're expecting on the daily time frame and all that stuff, then you can start to basically look for targets to the downside with some meaning. So here you have a market that compressed, and now you've got a range expansion. So we're looking for a risk to reward of 1 to 2. So if you put your stop loss above this larger range here, and you take a short at the break of this, then you're looking for some sort of target all the way down here, which is why I've got this arrow pointing at around the 1.89s. Now, if I just clear some of this off. So we're thinking that the guys that were patiently waiting up here, targeting the 1.89s. Today's Asia Pacific session boxed out here. We had a break to the downside, which is great. So you could have taken that trade. But if you look here, we've got a high, a low, a higher high, and now we've got a lower low. So if you're looking for a lower high for the sort of breakout retest continuation to the downside, so this swing low here could act as resistance. This low could act as resistance. So, if you wanted to be aggressive, you could have taken the aggressive breakout. If you want to be more cautious, you could wait for a breakout retest of that level and then a continuation lower. So that's good. And then if you want to maybe sort of split your trade into, possibly waiting for a higher and better sort of entry, you could put your half of your entry up here and half your entry here. So that's how you can enter into a trade in the direction of the daily momentum using current time frame momentum. So this is a 30-minute chart. And we just go back through some previous examples. So vertical lines when RBNZ changed their rates. Here on this chart, you can see that the lower time frame is not matching the higher time frame. The 20 is above the 200, so we're not taking any trades at the moment. Then we get a breakdown lower, and we can see here that we've got this particular box. This is the Asia Pacific session from the 12th of October. Obviously, we could look for that breakout retest continuation lower. That didn't happen. So, this strategy is not 100% foolproof. And, there is a chance that you're going to get stopped out. So, you need to manage your risk, which is why, that would have been a great entry potentially. But in the end, they basically took it sideways. So again, this one here, can't really do anything. The moving averages are all twisted together. Then this one overlaps the previous day. So that's a bigger breakout when you consider this range together. So now we've got a decent way of making your money back. So you've got, let's do it once. Come on, duplicate. So there you go. So if you had had a break even or even possibly a loss on this trade, once you actually come to this trade where you've utilized these two ranges together to form a bigger range, you can see you can make a lot more pips to the downside. And that's how you make your money, by making sure that your risk to reward is 1 to 2 or greater. And here I've got some more examples of when, trading with the higher time frame trend. Got a couple more sort of ranges that overlap, waiting for a bigger breakdown to the downside, following with the higher time frame trend. And if you take this range here and then this breakout, then like I said, the risk to reward is 1 to 2. You're trading in line with the higher time frame, and you're making money. Here it gets a bit trickier. So again, waiting for a breakout to the downside, get a retest. So you might have taken the aggressive breakout. You might have taken the classic retest. You might have waited for a test of up here. But either way, at some point, you're either getting stopped out for break even or you're having a small loss. That's when you take this and you start, like I said, utilizing the trend to the downside and then trying to make sure that you hold for a risk to reward of 1 to 2. So sideways market, you're going to get stopped out every now and then, but on the next breakdown, you're looking for risk to be up here. So even if we stretch it across, you can see it doesn't get touched, and then your reward all the way down here, and you can see at some point you get tagged and you can take your profit. All right, so that's how I'm thinking of trading rate cycles from the RBNZ and the Bank of England, in line with the higher time frame, in line with the bigger structures below the daily 20 period moving average. And on a 30-minute chart, just looking for high probability trades with a decent risk to reward of 1 to 2. And if I get stopped out once, then I just have to accept that it's maybe a sideways market and I'll get a bigger and better opportunity in the future. All right, I hope that makes sense. If you've made some money this week, try and keep it. It's the weekend. Always better to go into the weekend feeling happy. And I'll speak to you next week.